Dollar General, ticker DG, is a stock that has released earnings today, and when we are looking at trading, it is down 29% as we're recording this video, and we're currently trading around $87, $88 as we're recording this video. Now, what is the trade plan for this stock? So firstly, we did throw this in the Discord. Again, it is in the description if you want to join. So DG, Dollar General, got a massive sell-off on earnings. Again, self-explanatory. I'm flipping long bias on this now. Now, why are we flipping long bias on this? We will explain. I'm taking this earnings as an overreaction. Again, this will be explained. And now it's trading below the third deviation and trading below its IPO VWAP. So getting some size here, but if we do push down, we get some nice entries a bit lower down around that $82 to $79 entry. Now, we will go through all of this and I'll show you why I've got this plan in line. So if we zoom out to the longer term charts, because again, if we're trying to get these nice swings, this can help. So we'll go over the right chart first, because this is the simplest of them all. So this is a chart where I have my anchor VWAPs on, ranging anywhere from a year-to-date anchor VWAP. So again, this is all the trading data that's happened just this year, to this white one down here, which is a since IPO VWAP. So what this is a VWAP. So like if you trade intraday and you use a VWAP, this is one that is anchored from the first trading second of Dollar General and goes all the way to current trading time or current day. So again, we IPO'd in 2009, the 13th of November 2009. So this is a anchored VWAP that has gone that whole time. And what you can see actually throughout this time is it has acted as strong support that whole time. We come here, come here, come here. Even here, not as clean, but again, because it's new, you don't really count that as much, but nice, clean, nice bounces. And since then, we have not come back to retest it at all. So now what's happened is earnings has shot us right below this level, which is a big surprise. But overall, when you're trading below this level, especially on quite a quality stock like Dollar General, you can expect price to start moving and trading above it. Anytime you're being able to buy below the since IPO VWAP, you are getting at it at an extreme discount. So to me, it is already a great setup if you only had this. And I'll quickly show you why this is, because Intel is another stock that has done this recently. And again, when we did grab along, you come into this range. Again, you might even trade under it slightly, but overall, if you're able to buy at this value, you can get some nicer entries. And even on here, the underlying shares have already done a 10-11% bounce just on that anchor VWAP here. So again, trading that on the option can definitely increase those gains. So it's the same sort of thing we're looking at on Dollar General. Now, if we zoom out, well, again, if we now zoom onto the deviation chart. So again, this chart over here, this is anchored VWAPs on this chart. And then on this left chart, which is normally the one we'll use, this one doesn't always come into play, but when it does, it can just add our confidence. But this side is our deviation chart. So when we get trades on this side, again, these are more frequent, but they can also be really high probability. So standard deviation, you have the white lines. These are the means. Then you got these golden lines. These are our first deviations. Then you got the blue lines, they're second, greens are third. And take a guess, but the red is going to be our fourth deviations. So I won't go through the whole concept of standard deviations, but mean is considered fair value. First deviation, you expect 68% of the data to trade within those two golden lines. But in this case, just think about it as 68% of the data will trade above the golden line. Then you come down to the third standard deviation, the second standard deviation. That is 95% of the data is expected to trade above these blue lines. And then the third ones, these have a 99.7% chance that data should trade above it. So the way to think about this in trading is not that you'll instantly bounce off here, because no trading should be kind of below it, but it normally means that you won't stay below this level for very long before you start spiking above, because there's only two ways really price or that deviation can get trading back above it. It's either price pushes up, which will happen most of the time. In other cases, it will just keep trending down and bring your deviation down with it until it can finally kind of push above. But again, it may be lower than your current entry. So how do we kind of increase the chance of this turning into a winning trade? So again, we add it with the confluence, and we have that with our since IPO anchor VWAP, because this one will not move quickly. You can see how it's moved over the year. The whole of last year it was at 91, finished at 95, a $4 move. This year, for example, to open at 97, we're now at 98. It will move very slowly. So this really helps for price to kind of use it as a magnet for price to start and to try and push above. But overall then, how can we look for cleaner entries as of now? So again, getting in the area of the third deviations, which is 95 to 91, getting in anywhere at that area or below is always going to be quite a good entry. So we could be looking for an entry now. Again, then we have the mid-range before our next level. Again, this is still going to be a quality area to enter, but a lot of times if you retest that level, you will bring down to the next one. So the next entries could be at $82.40 and $79. So if price continues down, these will really be some golden entries to target long, because then on the upside, you can get some really nice targets. Your first target will be 91, then 95, 98. And again, we can even look to really hold through this level, because we would expect kind of Dollar General to start breaking above it. But again, these are just targets to take on the way up and then move stops to kind of at least break even, if not the lows. So that would again be the overall kind of setup we're looking at on Dollar General. Is we expect price to be trading back above that, or at least to it, which is at $98. So as we continue to push in now, good longs even where we are right now, but the golden entries would be 82 to 79. But again, there is no guarantee that we come down that low, so we could kind of come down to say 85 and then bounce, and that's why we get in some size here. But we definitely leave some money on the table so that we can get in a good entry at kind of that $82 to $79 range. And again, one last thing to cover on Dollar General is you always kind of get tests of the level. So you can see we opened up below it. So again, obviously we had our earnings, we traded below it. We opened up, you tested this level. Now, you can see obviously we sold off from that level, so that is showing that there is potential more downside to go, and that's what you can see. We then came down to test this. This is normally that next kind of bounce opportunity. In this case, we get no bounce. So if we don't get that, do we get a retest, which we do here? If we retest and break those lows, chances are you're going to continue down, and that's why we're now kind of looking at a good entry at 83. But again, there is still no guarantee that we come down to here. That's why buying at this range now can still be a great setup along to target again 91, 95 and $98, and then so on and so on. Because again, once we hit those again, we can target higher up, so it should be 102, 109, 114, 123 and 126. They're all going to be great targets on the upside as well. But again, main magnet for now, $98. Expect price to return to there in the relatively near future.